to the Trading Market Technicals morning call video for Thursday, May the 2nd. Red across the board, Dow down 138, S&P down 14, NASDAQ down 29, gold down 15. And that was due to a bad ISM manufacturing report and a poor jobs data, ADP jobs report. It's a little bit volatile on the number, but still nonetheless worse than expected. And we have been downtrending in our economic data. We have been getting worse numbers in the last few weeks. And that's not good when you have a market that's at all-time highs and you have extreme bullish sentiment. That is telling us to be cautious, like I've been saying for the last couple of months now. So you have to use caution. And this market is very dangerous at these levels, especially when you're having these poor numbers coming out. Now, let's briefly just touch on the FOMC. FOMC made a statement yesterday saying that they are committed to continue to print money until the unemployment reaches 6.5%. So they have pegged their asset purchase program until the unemployment reaches 6.5%, which to me is a huge red flag. And they were actually contemplating about increasing its asset purchase program. So to me, that tells me that they see something that we don't see, and the economy is not doing as well as everybody thinks they are. That's just my personal opinion, everyone. So, but that is a huge red flag for me as well. So that is something that's really kind of scary. If they're really to increase their $84 billion in asset purchases, I mean, where are we going here? I mean, that's just something really, that's frightening to me anyway. Last night we had another miss on our China HSBC manufacturing. We also had in Australia weak building permits, and I actually covered yesterday that I think China will be the canary in the coal mine, and I do still, in fact, believe that will happen. It might take some time, but when you have everything else that starts to trend lower as far as economic data, and you're going to have some sentiment that may be shifting to the bear camp here. Now, again, too early to tell, and it's not something to trade on, but it's something that you should keep in the back of your mind. Also, we have commodity block currencies, right? The high-yielding currencies, Canadian dollar, Australian dollar, New Zealand dollar, all-time highs almost. Now they have started to trend lower. They have not participated in this last push the last several days in equities. So that's something to keep an eye on too for those of you who are trading currencies. That might be a short possibility, a short trade in the coming days and weeks. All right, so let's get into the charts. Copper. Somebody is going to, one large fund manager will see, and probably is already, that copper has been deteriorating. And look at copper here. Copper had a huge engulfing candle. So any little bounce has been sold into. And as you can see, our copper and our S&P ratio has been just trending lower and lower and lower. And we couldn't even get a break above 50 in our stochastics. RSI, as you can see here, not even overbought, and we are not oversold. So copper breaks 3, you're going to have a huge flush to 285, maybe 290. So this is a really big warning sign, guys. I've been stating this when we broke lower here back in February. And again, sometimes when the markets get this bullish euphoria, they just tend to push everything to the side and just continue to buy dips. To me, this is a big warning sign. Now, just want to run through the VIX real quick. VIX didn't even move, really didn't budge too much to the upside. So there is still, I would say, a bullish sentiment to be buying dips. And again, buyers of dips will continue to buy until they get burnt. So this here doesn't tell me much. Although the CBOE did manage to close bearish, up 1.03 on the put-call ratio. But again, guys, we still haven't seen really much fear here. And again, one day does not make a downtrend. So we need to see a series of lower lows and lower highs until we start breaking some key pivotal support areas. Now, in the S&P cash here, we have a double top. Now, does this double top stay in place? Well, we don't know yet, right? Again, one day does not make a trend. It is refreshing to see that there are sellers out there in the market. So we wait to see what happens today. And I look for up to a 50% retracement on this red candle. And then if they come in and retrace here sometime this morning and roll, then I say you have some sort of a possibility of a tradable top in place. Not until that happens, and I'll go into that with the spiders. But take a look. You see our CCI indicator, commodity channels index, is making a lower high here. So we do have some divergence from where we were moving higher. And we could sell off 100 to 120 points easily down to here and still be bullish. And although, yes, we did break outside this uptrend channel, we could still come and catch this lower area. A break below the 1475, by the time that 200 bar gets up to that area, we'll probably meet right in this area. And if we do break below that, then you're going to come way down here to the 1420. Again, I think that's a little bit too far right now. But again, guys, these are the areas that we're looking for in the cash. Take a look at the weekly bar chart on the SPY. We were looking like that we were going to have an outside week reversal, but it depends. We have a full trading day today and tomorrow. We could easily get back into this consolidation zone here of the 159 to 155, just call it, in this area. So we'll just have to see until that closes out for the week. Again, spiders double top. Again, one day doesn't make a trend, but let's see where we go from here. I think that if we can get to this area, we are holding above the 20-day moving average. So again, still bullish. I mean, there's nothing wrong with a one-day pullback. But if we do manage to pop half of this candle and then sell off and take out yesterday's low on a closing basis, then I think you have something that that we will probably be looking for a shift in sentiment and we probably roll. Now remember, we are in a seasonal weakness time of the year. May and June are the two worst months for the market. So just keep that in mind as well. Here's the 60-minute. We did get that head test from our head and shoulders pattern. Still valid, right? We didn't break through it, so it's still valid. I would not like to see, obviously, this go any lower. That 153.75 is going to be a big, big area of support. Remember that. And if it does break, we've touched this 4 times. Way back in here. And here's going to be that gap area of support that we've been mentioning for weeks on end. So this is going to be a big area. If we do break this, this will be a valid head and shoulders pattern, and look for these areas of support for target. Now the neckline here, the target really comes in at 147.50, even if it's an overshoot right here, right in this area. So kinds up nice as far as symmetry is concerned, how we have this other area of support. So give or take within 50 cents, I'll take that as a good area of support on this head and shoulders pattern. Okay, and here's the 30-minute chart just showing you here that little double top area. We have retraced it all, and now we're back into this area again. And you can see all of our indicators are rolling over. IWMs now, this is where I say when you have these slow grind, right, the slow grind higher, and look what happens here. One day takes out 5 days of slow movement up. So this is telling me, look at this huge distribution. One of our leaders, right, big, big down day, distribution day. We're up at these lofty levels again. We're overbought in our indicators. All recipe is telling us for is what we're doing is we're looking for lower prices. But again, we need to get a little bit of a bounce. We are up a little bit in the pre-market, so a little bit into this area, 92-ish, and then fail, and we take out the low. That'll put us down in this area here, which would be below the 20 to 50. I would say at the very least you test this little pivotal support area of 89.17. Now, look at the thin zone we have, right? You have to keep an eye on this because if we do break higher, if we do break lower, we could easily flush down to this zone, this $84 area. So this is something that we need to keep an eye on in the coming days. And here's the transports, another one of our leaders, as you can see here, way back from November low. This uptrend line held. We did breach it ever so slightly, came back, and now we're back testing this upper trend line. Couldn't even get above it. So this is here telling me that this is a huge warning sign. For those of you who are holding positions, please be aware of that. This is a big, big warning sign here. Okay, and here's the diamonds. Diamonds, again, Dow Jones, big uptrend support, broke lower, and now we're just kind of back testing this area here. Again, guys, one day does not make a trend. I'd be looking for some sort of a gap fill and then fail and look to take out the lows here for this morning. If that does happen, then I would seriously think, again, that we'd probably be looking for lower prices. Now, here's Goldman Sachs, and we've been looking at Goldman, and when I look at the banks, where do you go? You go to Goldman, right? Everybody says, oh, if Goldman goes, the market goes. So I don't know if that's actually absolutely true, but I will tell you, I did a fib from the top to bottom here, and we held right to the 50% retracement. Now we bounce, and we had a couple of bear flags. And here's what's disturbing, right? If you're a bull, lower high from the high, lower high, lower high, lower high, and now break of this bear flag. So we have a price break on a bearish pattern, right? We could not still break above this downtrend line, and we're sitting on the 50% retracement. And look at what, from here to here, you have a huge thin zone. So Goldman could easily flush to the 61.8% retracement before looking for some sort of a dead cat bounce, which coincides beautifully with the 200-day moving average. Then you can even get down to the 76.8% retracement, which would come down here into this area. So these are my target areas here, guys, for a flush, and I think we have actually now broken this bear flag, which tells me that this setup is now valid. So even if we get back to, let's say, the 143, 144 area on a closing basis and start to roll over, I think you could put on, buy some puts here or get a short position on in Goldman. And that would actually help the XLF start to break down as well. So we had this little broadening top here. We're still in this big rising wedge, and now we just kind of rolled back over again. Now, the XLF obviously is holding well, right? We're up at the 20. We have the 50 here. 200 is way down below. And this bearish rising wedge needs to break this, which coincides nicely with the 50, to really get going for any downside pressure. But if Goldman starts to move, you're going to have the other larger banks follow as well. And Apple as well. Apple here, big uptrend channel. Apple actually held up well with a down market, so that's kind of bullish. So if we can still hold this this downtrend channel, this upper downtrend line, and we could still hold in here, then Apple could actually consolidate and really take a big push back to the 460 area, at least back to this 460, 470 of the head of this head and shoulders pattern. Okay, let's keep an eye on that. And lastly is the Qs. Obviously, the Qs held up pretty well with Apple. We are above that, broke above this little area of resistance. But keep an eye on it, guys, because the market starts to break down. Technology will probably follow as well as the banks, and those are the key sectors that you want to look for. All right, guys, have a profitable day. I hope this helps for everybody. And again, please use your stops, and let's see what happens today. Let's look for a bounce and a fail. If the bounce starts to fail, 38, 40%, 50% of that move from yesterday, then I could probably say, safe to say that you have a good shot of a couple of good short setups this morning. All right, guys, have a great day. We'll talk to you tomorrow. Take care.